Taxation, one of the most important element in the economy of a country. Because of taxation, the country survives. How is that? We will see in this module. Taxation is of two kinds, direct and indirect. Before that, let us start with what is taxation. Tax is a charge levied by the government on its subject, that is person, for meeting its expenses. Simple to put in another words, who is a person first? A person includes an individual like you and me. It can be an HUF, that is Hindu Undivided Family, a company like Reliance, firm, a partnership firm formed by two or more people, association of person like a BCCI, a cricketing organization, local authority like a municipal corporation, or artificial jurisdictional person that is not falling with any of the above category. These are the person on which government charges tax. Why does the government charges tax? To meet its expenses. What are the different kinds of expense? The expenses such as defense. One of the main element for a country to stay stable is the defense of a country. So the expenses required to meet the defense needs such as the arms, the ammunition, the facilities to the soldiers at the border is taken care by you and me by paying tax to the government. Government charges us tax for these activities. Second is the salary of the staff. A government employee earns salary through you. The tax which you pay is the salary which is earned by him. So in other words, if I can put, salary to the staff is paid by you. That is the government staff. Next is maintaining and developing infrastructure. Our country is growing. It is transforming itself from an underdeveloped country to a developing country, and in time to come being a developed country. So for it, infrastructure is important. We would have seen different projects coming up in India in the infrastructure background. Why it is possible? Because of the taxes paid by you and me. Next is the maintenance of roads, sanitation and health. It is still not to the mark, I can say, the maintenance of roads, sanitation and health in the Indian perspective, but the measures are made to reach to the level of the other developed countries in the world like USA as far as sanitation goes, road goes. So if we continue paying tax to the government on time and in a proper manner, these things will be also taken care by the government. Now let us move ahead. Let us understand the different types of tax. The first one is a direct tax. What is a direct tax? Direct tax is a tax which is directly levied on the income of the individual or person. To put it across, tax, it is whatever you earn, you pay directly to the government. It is a charge. Levied means charge. So tax which is directly charged on the income of the individual or a person. Income is something which you earn. So let us understand the different kinds of direct tax. Number one is your income tax. Income tax is a tax which is paid on the income earned by an individual or any person mentioned above in the earlier slide. Then next we have something called as a wealth tax, which is similar to your capital gain tax. Next is your corporation tax. Corporation tax is a tax which is paid by the corporates, whereas gift tax is a tax which you pay on the gift earned by you above rupees 50,000. So these are taxes which are directly charged by the government on its person, hence it is called as a direct tax. To summarize this slide, I can say which goes directly to the government through you is a direct tax. Then what is indirect tax? Indirect tax is a tax where burden is passed from one person to another. What do I mean by this? Let's take a simple example. When you go to McDonald's, a burger there is costing 25 on the screen, but when you pay to the cashier, you pay 27 or 28 rupees. Why? Because it is a service tax which is charged by the McDonald's to you. Who's earning an income here? Income is earned by McDonald's, so they have to pay the tax. But what is happening in this case? McDonald's is charging the tax to you, they are collecting the tax from you, and they are paying it to the government. So what is happening in this case? The burden is passed from McDonald's to you, and you pay to the government in an indirect manner. So this is called as indirect tax. What are the different kinds of indirect tax? The different kinds of indirect taxes are custom duty. Custom duty is a duty which you pay for the import or the export of goods. Next is excise duty. Excise duty is paid for the manufacturing of goods. Next is service tax. Service tax is a tax which is paid for the service rendered by an individual or by any person. In simple words, service tax is a tax which you pay for the service. VAT or CST, that is value added tax or central sales tax, is a tax which is paid for every value addition on the goods. VAT varies from state to state, so it is charged by the state government. Service tax, excise duty and custom duty, all these three taxes are the same and they are charged by the central government.